the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, the Straits Times Index right here in Singapore briefly notched a new record of 4,008.15 points today as Singapore draws a rush of investors seeking safe havens from geopolitical risks. Now, this is the second time the benchmark index has crossed the 4,000 point threshold. And as we look at the closing numbers, let's take you through them. We do see the STI closing further in the green, up 0.53% to close at 4,010 points. Well, in terms of value turnover, that's 1.46 billion Sing dollars. Gainers outnumbered losers 302 versus 186. Top advances for today, we've got for you Holpa, UOL and GMXUSD, and top decliners, we've got for you DBS, ASUS and Cortina. Now, in terms of counters to watch, we have Yangzijiang Financial because the group released an update today that its proposed spin-off company, Yangzijiang Maritime Development, has been incorporated as a wholly owned subsidiary right here in Singapore. Now, elsewhere from how U.S. President Donald Trump's One Big Beautiful Act narrowly scraped through the Senate overnight to how Intel's new CEO is reportedly exploring a big change to its contract manufacturing business. We've got more international and corporate headlines in focus. And joining me on the line today is Too Jun Cheong, Dealing Manager from Moomoo Singapore. Jun Cheong, welcome to the show.
Hi, Tian Tian. Thanks for having me.
Great to have you, and so many things going on this time around. So let's start with the U.S. Jun Cheong, U.S. President Donald Trump's One Big Beautiful Act that narrowly scraped through the Senate overnight. Now, sentiment for now appears mixed because optimism over the extension of deep tax cuts that was offset by warnings that it could add around $3 trillion USD to the country's already ballooning national debt. Now, question for you, though, if the legislation passes through, what will be the implications on U.S. markets?
President Trump's so-called One Big Beautiful bill had scraped through the Senate yesterday. So now while it's being touted as a win for tax reform, it's also raising a lot of serious questions as well, mainly because it could add about $3 trillion US dollars to an already ballooning national debt. So if the bill is fully passed, we are likely to see a short-term sugar rush in the equity markets because lower corporate taxes means higher net profits, and that could lead to more stock buybacks, stronger dividends, and these are some of the things that Wall Street typically loves. So sectors like banking, industrials, and even retail could benefit. But the catch here is this kind of fiscal stimulus, especially at a time when inflation is still sticky, could force the Federal Reserve to stay hawkish for longer. And the bond market is already reacting. Yields are up, bond futures are falling, and that puts pressure on rate-sensitive sectors such as your real estate, your REITs, utilities, and even some part of tech, all of which are capital-intensive. So while near-term market reaction could be bullish, particularly for a large cap, there's a growing risk of medium-term volatility once the focus shifts back to debt sustainability and interest rate expectation. Investors should continue to monitor this situation and adjust their portfolio accordingly.
All right, and Jun Cheong, going back to the Singapore stock market as usual, earlier we talked about how the STI briefly notched a new record of 4,008 points earlier today. And in fact, if we look at the numbers, the intraday high, I believe, is 4,011 points. We close at 4,010. As Singapore draws a rush of investors seeking safe havens from geopolitical risks, how would you read into today's movements? Any more legs to go to this, and any surprises when it comes down to the biggest movers?
Like you said, the STI briefly hit a new record of 4,011 points, and that's a psychological milestone and a reflection of strong investor confidence, especially as a lot of capital rotate into the so-called safe havens amid global uncertainty. We are seeing a lot of strong flows into blue chip names. Banks like DBS, OCBC are leading the charge, of course, from their attractive dividends and robust balance sheets. Although, of course, for today's trading session, they are not a top performer. I think the top performer today are things like UOL, Hong Kong Land, and Sembcorp, which are also holding up well as investors are looking at defensive play. So, are there more room to run? I would say possible. But it's, I would say, with caution. Profit taking is natural at this level, and geopolitical risk remains. So fundamentally, Singapore's macro story, so stability, yield, fiscal prudence, continues to support a positive bias.
All right, and Jun Cheong, I do want to talk a bit more about Yangzijiang Financial, one of the companies to watch for today, because Yangzijiang Financial released an update that its proposed spin-off company, Yangzijiang Maritime Development, has been incorporated as a wholly owned subsidiary in Singapore. Any thoughts on the counter's share price movements today? I mean, the last I checked, earlier in the afternoon, around 5.33% higher. How far is this within your expectations?
So Yangzijiang Financial, they did make the headlines today after confirming this incorporation of Yangzijiang Maritime Development. It's a strategic move, and the market seems to agree. Like you said, with the stock up about 6% at one point. Now, what this spin-off does is it creates a cleaner separation between their asset management business and maritime leasing arm. That allows investors to value each segment more precisely and potentially open doors for the maritime arm to be listed separately down the line. Something that SGX will already be happy about. So this is what we call value unlocking strategy. It often drives re-rating into the parent company stock. In fact, we've seen similar positive reaction from investors in the past corporate breakups, especially when it gives more visibility into earnings and capital allocation. So going forward, I'll be watching how this maritime unit scales, especially in areas like vessel financing and chartering, which are enjoying a rather recovery in the global trade after the COVID-19 pandemic.
I see. Well, another counter to watch for today, Jun Cheong, is NIO, which is an EV maker. Now, the EV maker delivered some 24,900 vehicles in June, an increase of 17.5% from the year-ago period. And if we set our time horizon to the 3 months ended June, it delivered some 72,000 vehicles, an increase of 25.6% on a yearly basis. Question though, we've been looking at NIO for some time right now. Are the numbers, the latest set of numbers, enough to pique investors' interest in the company though?
NIO's latest delivery figures are definitely eye-catching. Under 25,000 vehicles in June, 72,000 for the quarter, a solid 25% year-on-year growth. However, it also shows that despite a slowdown in the global EV sentiment, demand for premium Chinese EV remains strong. Their new models like the ET7 and ES6 seems to be gaining traction, and that's encouraging. However, investors will have to also note about their competitors as well.
Yeah.
So the recent launch of the Xiaomi U7, we saw about 240,000 orders within 18 hours. Still, the share price for NIO has seen a bit of bump. And for longer-term investors, this could be a signal that NIO is holding its ground in a very competitive EV landscape.
Okay, now if you're just tuning in, we're now in conversation with Too Jun Cheong, dealing manager from Moomoo Singapore. Well, Jun Cheong, across the region, Asian markets swung today a mixed bag amid, of course, trade war worries, because US President Donald Trump, he said he would not push back next week's tariff deadline. And Tokyo, in particular, took a hit today because Trump slammed Japan over US rinds and auto exports. Question then, what does the road ahead look like for Japan, and how long can that sell-off in Tokyo last given the ongoing situation?
For Japan itself, the markets there were rattled today, with the Nikkei 225 falling over 1.25% at one point, before closing 0.56%. After, of course, President Donald Trump ruled out delaying next week tariffs, as well as taking aim at Japan's auto and rice exports. Now, Japan is very sensitive to such trade changes, particularly from the U.S., because it is their top export destinations. So auto giants like Toyota, Nissan, along with their part suppliers like Denso, they were really one of the hardest hit in today's sell-off. So really, how long can this last? In the short term, expect continued volatility, especially in export-driven sectors. But longer term, Japan will remain resilient.
Okay.
Its corporates have strong balance sheets, and the central bank is still very accommodative in boosting the economy.
I see. And Jun Cheong, in more corporate news, Alibaba Group Holding is adding new data centers in Malaysia and the Philippines in pursuit of AI-driven growth. Now, Alibaba Cloud also said it is launching a global competency center right here in Singapore to accelerate AI adoption across industry. What do you make of the latest move, and really, how far is Southeast Asia the next battleground for Gen AI firms?
This is a big deal because Southeast Asia is one of the fastest growing digital economies globally, with regional internet economy expected to reach over 300 billion by 2025. So Alibaba is essentially doubling down on their cloud and AI as its next growth engine. by localizing infrastructure, they're not just improving performance, they are also complying with strict data sovereign laws, which is key for them to work with banks, governments, or even large enterprises. This move really pushed pressures on, let's say, your Amazon Web Service, your Google Cloud, Microsoft Azure, all of this, which are also at the same time ramping up in this region. So the battleground for AI and cloud dominance is definitely heating up, and Southeast Asia is currently right at the center of this.
I see. And finally, before we let you go, Jun Cheong, Intel's new CEO is reportedly exploring a big change to its contract manufacturing business to win customers in a potentially very expensive shift from his predecessor's plans. A lot of details to go into, processes as well. But any initial thoughts at this point, and really what is the outlook for Intel then?
Under the new CEO, the company is, of course, reportedly reviewing the entire contract manufacturing strategy. They will delay the rollout of their 18A processor and refocus on their more stable 14A node to attract outside customers. It's a really bold move, and frankly, it's rather high risk. So Intel is trying to win back lost grounds to your likes of TSMC, Samsung, and this means rebuilding trust in their foundry capabilities. If they can deliver high-quality chips on time and at a scale, it could be a turning point for them. Think of their potential if they win contracts from your likes of Apple or NVIDIA. But of course, this pivot comes at a cost. CapEx will rise, margins could take a hit, and execution risk is high. This semiconductor space is, I would say, brutally competitive, and investors will be watching closely to see if this is a smart reinvention or a costly detour for Intel.
I see lots to track indeed. Thanks so much for the insights, Jun Cheong. As always, that was Too Jun Cheong, Dealing Manager from Moomoo Singapore. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.